The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Voice is a little under the weather today due to the Palo Verde trees that are outside the house here on the street, and they have attacked me once again. Now, I posted a chart for the FTSE, the daily, and also the FTSE for the DAX, and also the FTSE for the DAX, and also the DAX on the 15-minute. As you can see, we've had these explosive moves in Europe. It basically started in the middle of the night when the ECB decided to get together and put in $500 billion. Now, stop and think, folks. We put in $3 trillion with maybe another 3 coming. That's really not very much, but it sent the dollar down and it sent the euro up, but we'll cover those in just a moment. At the break, our guest will be none other than Bill Meridian, Cycles Research, #1 timer. His picture will be up there in just a minute. We'll share it with you, and so you'll be able to take a look at it. Folks, one of the things, because you're a technician, that you have to do is you have to use other things other than what they're trying to tell you in the news. One of those things is market feedback. Now, all of you remember yesterday I brought to your attention this big 3 drive to a top pattern that was happening in the NASDAQ yesterday. This was right at the open, folks, pretty much. We got up to the 96. I think we hit 96.80, something like that, and then we backed all the way off to 93 and change so far today. Now, each of those moves is perfectly symmetrical. In other words, if you take the AB leg and measure it in time and price, you'll see that they actually line up perfectly. And so when you connect the highs, it is an absolute perfect 3 drive to a top pattern. It fits everything that you could possibly ask for to see. Now, one of the things that we follow here, since we don't have fundamentals to look at, we look at the open interest of what's going on. And yesterday with that big move, we had a big drop in open interest in the E-mini S&P, and we also had a drop in the NASDAQ and also a drop in the Dow Jones. So whether that's going to be meaning anything or not, I don't know. But market feedback is very important because last night, as the Dow Jones, which was the leader, those 30 Dow stocks, that was the leader. We were up almost 400 points. I'm just going to share with you the move that we had yesterday in the NASDAQ so you can see the difference that what we're looking at. You'll see here that fact is the NASDAQ went down below 9,300 this morning before I posted this a little while ago, and it's already dropped. I think we almost made new lows. I'm not quite sure. But you'll notice the high we made up there around that 9,600 level. Then we came down and we made the ABCD pattern almost to the 61% retracement last night. And then, of course, we've had this sell-off. Now, if this is correct, this could be a possible ABCD to the downside. The second alternative is that people could view this as a buying opportunity in these NASDAQ stocks, and we could turn and go higher because it's very, very nervous out there to see what's happening. There's just so many people are afraid, and other people are not afraid. So in a few weeks, we're going to find out, who was right. So we'll be able to tell what's going on. When I show these variances between the NASDAQ and the S&P, you have to realize that NASDAQ, 20% of that NASDAQ is Apple and Microsoft all by itself. So those are the main thing. Now, we had a big move in the airlines yesterday, another big move in the airlines today. So we're glad to see that all of the airline stocks are back in business, and we're normal here again in the United States. And so that's really good. The next thing we'll have the cruise ships will be out sailing without me, of course. Maybe Tom will take a ride on one of them, but I think I'll pass on that one. Okay, now I wanted to spend just a tiny bit of time here on one pattern that is coming up that could be very, very interesting. I'm going to do it in sequence. Oh, I got to cover a question we've had in Bitcoin first. Let me get this up here. You'll be able to see here where we come here. All right, you can see here we have this 3 drive to a bottom pattern that occurred on March the 13th when everything was bottoming. If you remember, that was a really big Astro day, and it turned the markets and everything else. We've been rallying for 2.5 months now in the Bitcoin, and you'll notice that little arrow there around 8,000. If we can get that there over a period of another few days, that's a 382 retracement in a new bull market, in my opinion, from the low that we made down here at around 4,000. So keep an eye in that. I have not bought any coins or tokens in these markets. I bring them to your attention because more and more information is coming out that many of the big players are now in there buying these things, so you need to pay close attention to them. Remember, there's a difference between a coin and a token. A coin is a cryptocurrency that has its own blockchain. A token is a cryptocurrency that uses somebody else's blockchain. And Ethereum, which is the 2 big blockchains, of course, are Bitcoin and Ethereum, and Ethereum provides about 80% of all the other blockchains for all the smaller coins that are out there. I have not bought these. I don't intend to buy them. I'm just looking at them because I think they'll be interesting, just like the internet was interesting back in 1996. So whether that's the same thing. Now, Mr. Z just posted one of my very famous quotes from Mark Douglas. The 4 fears that we have is the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. And after watching Mark conduct hundreds of interviews here in Tucson over the years when he was writing the book, Trading in the Zone, it's really hard to believe that the number one fear of these guys that are super successful is leaving money on the table. I tell you, it was amazing to the man. They all think they're going to get the bottom and the top exactly, but they're still incredibly successful. But that fear, they're not afraid of being wrong because they know they're going to be wrong a lot. They're not fear of losing money because the only way you're not going to lose money is you're going to have every winning trade, and that's not going to happen. You're going to have periods where you can't do anything right. And the third thing is the fear of missing out. That happens all the time too. But it's really funny though, because if you stop and think on number 4, the fear of leaving money on the table, the only person that doesn't leave money on the table is the person that gets the high tick on the sell and the low tick on the buy. That's the main thing. So we'll see what happens with that. But anyway, that's what we're watching here this morning. Remember, in about 15 minutes, we're going to have Bill Meridian on from Cycles Research out of Vienna, Austria, soon to be out of Vienna, Austria. I think he goes back next week after being here for the last 3 months. So we'll watch it. We'll see. Okay, Maria's asking, the NASDAQ is at Friday's levels and the ES is 75 points higher. That is just rotation, I think, Maria. I'm not sure. But remember, the NASDAQ is basically, 20% of the NASDAQ is Microsoft and Apple. And Microsoft was down yesterday with the market up 600 and some points. So that's what I think that could be. But, hey, I'm wrong a lot. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I put a chart up of the June gold because it is still has the biggest open interest, but dissipating rapidly. August gold is trading at roughly a $10 premium. But you'll notice on this chart that goes back the last several months, we show the big patterns and how it made, 618, 786. But if you look closely, I know it's repetition, but as they say, repetition is the mother of knowledge. If you look at the high on April the 13th to the low on the 20th, you'll count those days down. That is basically 7 days down. So you want to see from high to low, because it'll most probably repeat. And if you look again between the 23rd and the 30th of April, the same thing occurred. And then when the market started up, the time up was equal. Now, what's happened here is, if you'll notice on the upper upper right-hand side, where you see the the 135 pattern of lower tops, that's what we've been watching here. We focused on this last week. We were looking for a price level at around 1699 to 1700, and we've been to 1684 already today. We have not quite taken out the lows of May, but we're very, very close. Folks, this is acting very, very bearish, and I wouldn't be surprised if the gold started to accelerate to the downside. We were short this from the 1735 level, and I covered that at the $17 level. Actually went long last night for $2. Actually, probably would have break even because it went to 1708 and then broke, but we did buy it at 1700 and had a little bit of a profit, and I said, put your stop as close to break even as you can. So I assume that's what everybody did, and now we're trading down more, and I wouldn't be surprised if we really start to accelerate to the downside. The reasoning for that being is all the bullish stuff that's happened should have made the gold market go nuts, like the Federal Reserve coming in there and putting more money into the pot than even Helicopter Ben did by several degrees. we will see what's going to happen here, folks. But I really believe we got a chance to see gold down to the 1650 level. That's only $35 from where it's trading right now, so we could easily get to that without too much trouble. We'll see. They are mentioning, yes, the FANG stocks yesterday were under a little bit of pressure, but the main ones, of course, were Apple and Microsoft. That's what pushed the NASDAQ down. I think that's something you got to pay attention to. Also, I got to bring this to your attention because I actually didn't believe it when I saw it over the weekend. One of our listeners here at TFNN asked me to go in and check out this webinar that was going on. It was a fellow, I'm not going to name any names. It's just the biggest live trading room in the world. And look at the bottom, folks. The guaranteed 500% return on investment guaranteed. I almost, when I said that, I said, wow. I said, I can't believe anybody could do that. 500% rate of return. In 3 months, you'd own the world. Look at the track record, folks. Now, this is why you've got to be careful. And I'm bringing it to your attention because there's a lot of people out there that believe this kind of stuff. I don't know which one it is, Duffy. I don't want to mention any names. But look at this. They're saying $1,000 in U.S. Steel. Then they moved into Google, and then they moved into Alibaba. And those three trades from $1,000 netted $1.18 million. That's better than the 5% a year that you get at the bank on your savings account. Oh, you don't get that anymore. But anyway, unfortunately, I think people probably fall for that stuff. But my goodness, I mean, that seems like a little wild one for me. But who knows? That's really tried amazing. Okay, let's take a quick look here at this is a trade. We're going to talk about the euro and the U.S. dollar here. We've got Bill coming up, so I wanted to make sure that I go through this and give you an idea. Now, here is the U.S. dollar. And it's important because we're at a real critical level here. You'll notice that the U.S. dollar has now come down, and we have taken out the April lows by just a little bit. We haven't collapsed as of yet, but there's also a possibility that we could. So the key today is we have to watch if it's going to close below this 98.85 level, because if we do that, that's going to seem like the U.S. dollar is under a great deal of pressure and pushing the market to the downside. And how it will react to the other things, I don't know. Now, someone's asked a question about Treasury bonds. Folks, the Treasury bonds have topped, and they've had a pretty good sell-off off of those highs that we looked at just recently. If you remember, we brought this to your attention excuse me, several times. And all we're trying to do now is to see what's going to happen next with these things. That's the real key to what we're looking at. So if you'll give me 1 second here, I'll get this bond chart up so you'll be able to see, because we're trading down near this 77 level again. And if we go below that 77 level, that's going to tell us that we're going to be heading down. And should we get below 176, it would be incredibly bearish. So that's what we're watching here. Now, I know the stocks are going nuts, and that's what they should do, because everybody, when people buy them, they go up. That's it. The only thing I'm alerting you to the fact that we do have some type of divergence in the NASDAQ, which has been the leader the whole way. And this is the first time we've seen that, was yesterday. We had that big 3 drive to a top pattern, and we've now broke 300 points from that. And during that going down, you know, the S&P and the Dow Jones have gone up. Now, let's say you're on a 3-day vacation and you heard that the S&P and the Dow were where they are, and you were long the NASDAQ. You would be really happy until you looked at your equity run and realized that you're getting killed. So I don't know. This is what you mean by direct market feedback, folks, if you're a technical trader. You don't listen to the fundamentals. You just look at it. If there's more selling, prices are going down. And stop and think. It takes someone with a great deal of conviction to be selling the strongest market on the board all night long yesterday and today without even worrying about what the Dow is doing. And so that's why you've got to, focus on, what really is important, and that's the amount of money that you have to risk when you're doing this. So just keep in mind that it's the amount of money that you don't lose, folks. That's the real key. Not all of us can take $1,000 to $1.1 million, but I will tell you that it did take 6 months to take that $1,000 to $1.1 million. So that's pretty good. Yep, the Dow is the headline number. That's what they're looking at, and the number one that they're watching probably there is is Boeing, because they're supposedly getting everything going back to work, and we'll see if that means anything or not. We'll go here. Okay, now we got a break coming up here just a little bit. And then we're going to have Bill Meridian from Cycles Research. Tomorrow, our guest is going to be Shane Smolian. He's going to have some really good stuff on ABCDs and how he adds some cycle things. And on Friday, we have Andy Pagioli from the UK. His cycle work is really quite good. And Mr. Z said he turned $10,000 into $500 in a month. You know, this one thing, if you have the one way to make a big fortune is to start with a bigger fortune. That's the way to do it. Anyway, everybody's done that, Mr. Z. That's not even going to get you in the World Book of Records because of the fact that you take losses along the way. And we've watched your trading, and you too, Marshall. You guys post some really great stuff in here. We love it here in the den. Take a break, folks. We're going to talk to Bill Meridian, Cycles Research, in about 4 minutes.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Bill Meridian, Cycles Research. Bill, you just received some accolades from Timer Digest. You want to tell the folks what you did?
Oh, yeah. Well, I was undercover. Good morning, Larry, and good morning, everyone. Thank you for listening. I was on the cover, and they told me that I forget where I am short term, but long term I'm number 6 of the 150 or 160 services that they follow.
Wow,
So,
that's really terrific to be in the top 3% of anything. But that's a pretty tough group too. Congratulations, Bill.
Thank you.
When will you be going back to Austria? You've been gone about 3 months, haven't you?
Yes. Well, trying to make a decision here. I have to come back in the autumn, and my dear wife says, "Well, why don't you just stay on through instead of make one trip this year instead of 2?" Because she's of the notion that the pandemic may flare up again in the autumn, which is what some of the experts say, but the experts have been wrong thus far, I think. And so,
well,
but I
whatever you do, I hope you decide to make the right choice, my friend. We love having you on the show, but we want you to be healthy.
Well, and most of the restaurants and cafes there, I understand, have opened, but they close down pretty quickly because there's no tourists, there are no customers.
I know. That's what happened here in Tucson, too. Bill, what do you got for us today? What do you think of the stock market in here? One of our questions that someone's asked is, do you still feel that stocks are going to gain for the rest of the year? That was the question that the gentleman asked.
Yes, I do. And, first, let's go through it. I'm on page 2. You got my PDF, PowerPoint?
Yes, I sure do. I'm on page 2, you bet. Before
we run out of time, the Foundation for the Study of Cycles has returned, so please Google and look at the new website, and we'll be having a World Cycles Week, I think, in the 3rd week of June, and I'll probably be on before then and can tell you about it. I'll be speaking. And my astrology columns that appeared in Dell Horoscope for 30 years will now start appearing in the Mountain Astrologer beginning in August. So on to the stock market. Today's perspectives. Stocks are still strong, but gains may moderate short term. Bonds. June is likely to be a down month. June for bonds is like September is for stocks. It's usually down. And gold, the cycles are peaking here, so likely to pull back in the month of June. So it looks like it could be a down month for bonds and gold, and stocks may moderate a bit in their strength. If we go to the next slide, you'll see the cycles. See, they're a bit conflicting here. The weekly cycle on the top has peaked. You see the red vertical sell signal. But the monthly that has been so helpful, you'll see it moderated a bit since the low. It actually, dipped once, and then it's relatively flat. But here it's actually bottoming on June 1st. The monthly cycle is a dynamic cycle because it is generated from the most recent data. The seasonal cycle, that June is a down month, September is usually a down month, is a static cycle, and this dynamic cycle usually exceeds that, usually takes dominance. But as you can see, the weekly cycle points down. June is usually a down month, but the monthly cycle points up, so you'll probably just get moderate gains in the month of June. And, I think we'll see the S&P here in another couple of slides. But so cycle confirmations, as mentioned in a past report.
Let me get it up here, Bill. 1 second here, my friend. Okay, We're ready to go. There it goes.
Okay, if a market has risen by 30% off of a low, it does not tend to drop below the prior low. So it would pass that level. Then it would pass 38.2%, 50%, now 61.8%, and there's no place left to go but to a new high. I mean, 78.6, and some people use 80 as a Gann ratio, but I don't see that. And smart money hedgers, this is a sentiment indicator, increased their record net long exposure to the major equity index futures. They have almost $50 billion worth of contracts. That's been over the last decade bullish for stocks. And once again, as I keep saying, it's if you take liquidity, tremendous amounts of liquidity, which we do have, and very negative sentiment, which we have, you get higher prices. There have been numerous studies that show that. And that's one of the overriding factors. But I have something new I want to tell everybody at the end here that I don't think anyone else is pointing to. If we go to the next slide, This is
Time Magazine.
This is a contrary opinion buy signal. And it, of course, is in red and black, very threatening colors. More Americans are unemployed than at any time since the Great Depression. So, to me, that is it is a buy signal, and as the work of Paul Montgomery showed, if this type of a message appears on a regular magazine, that means the bearish sentiment is permeated out of the financial press, out of the Wall Street Journal, Investors Business Daily, any financial magazine, and it's made it into the general consciousness. So that's he gave these an extra plus for being bullish. So now we can look. Here's the S&P except for yesterday's close, and you can see we retraced. Well, this is inverted. 38.2. The graph says 61.8. 50, 61.8. We're now well above that. So all of these retracement levels, the Elliott waivers would look ABC down. Well, we had ABC, but there's also the fifth wave down. But if this is a fourth wave, it's too strong. It's retraced too much territory. So therefore, it was an ABC correction. ABCs occur as corrections in ongoing bull markets. So therefore, the conclusion is that this bull market is still intact from 2009, and that was just a wicked correction.
Wicked is the understatement.
Well, it happened faster.
Yes.
More points faster than any correction in history. So, by the way, I'd like to add in the same thing happened, and this is for people who use cycles and models. My oil cycle still points down until late October, early November. But I said it would go to $9, $10 a barrel. Well, it already did that. In other words, it did it in about half the amount of time or two-thirds the amount of time the cycle suggested. And I've told this story before, but I think it's very important that the late Arthur Merrill, who wrote Behavior of Prices on Wall Street when I lived in Manhattan, as he did, after the 87 crash, I called Art and I said, "Hey, Art," I said, this correction is, I said, could this be a completed bear market? What's more important, price or time? And he paused a minute and he said, well, if I had to pick one of the two, I'd pick price. I said, so in other words, the 1987 crash from August down until the low in October could have been a completed mini bear market, and Art said yes. So I think that's what happened. In other words, the point is we didn't have a bear. Price is more important than time, and so therefore I had to reverse my position and go bullish on oil this week, simply because now the weekly cycle has turned down, but oil keeps rising. So, and
wow, that's really amazing, Bill. Before we go to chart number 9, we got a break coming up. But what do you hear from your friends over in Abu Dhabi about the oil market? Good. They're usually contrary opinion folks. Do you have any feedback there?
Yeah, they're very negative, which is bullish.
Oh, that's for sure. Okay, let's take a break, folks. We got Bill Meridian from Cycles Research on. We'll be right back with more of Bill. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL SPUU or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Bill, you hit on one of my favorite things when you're talking about the 2020 forecast, but you mentioned about Harding and Coote. You want to go through this because I love the history behind this.
Look at the S&P monthly on page 8 first. I just want to finish my point, which is if you look at it, that was a 38.2% retracement in a bull market that began in 2009. And you can see it very clearly there.
Yep, sure was.
So let's move on. A lot of people don't know it was a 2020, 2022, 2021 depression, and you can read all about it at the Ludwig von Mises site at the Ludwig von Mises Institute is at, I forgot the name of the university, down in Alabama. It'll come to me in a minute. So you can read about it at that link. They got a lot of great information on that depression. That depression brought unemployment from 4% to nearly 12%, and GNP, they called it at the time, declined by 17%. It's at Auburn University. So if you take 1920 and you add 100 years, you get 2020. Now, we already know that years ending in zero are usually down years in the stock market. The 1920 downturn was on the line of magnitude with that of 1848, which was very severe, and the magnitude of the Great Depression. But both the 1848 and the 1920 depressions were over in 2 years because there was no big government to try to cure the situation, as occurred in the 30s with the New Deal and inflating the currency. Presidents Harding and Coolidge actually reduced the size of government, leading to the Roaring Twenties. So this is an indication. I had put this in my institutional work last July and forgotten about it and just rediscovered it. But this would be an indication that the market is going to bounce back quickly, and the key is that the government does not get in the way. And this current administration has reduced regulations, gotten out of the way of business, allowed free enterprise to flourish. And Coolidge, as I said, actually reduced the size of government. He was known as Cool Cal and was known for taking little action and uttering few words. And the story is that he was at a Washington, D.C. gala dinner, and some socialite lady came up and said, "I bet my girlfriend's back there at the table that I could get you to say more than 3 words." And he said, "You lose." So that's the type of, it was a hands-off attitude. And by the way, that led to the Roaring Twenties, the great boom. But unfortunately, they started listening to Irving Fisher, and he convinced the Fed to inflate the currency so that prices wouldn't drop. And actually, very few people know that the 20s was the first boom in U.S. history in which prices did not fall like the prices of computers and watches fall now, because we get more and more for our money. And so that led to too much money in circulation. That led to the excessive stock market run-up. And then the crash was attributable to the Fed inflating the currency. But the 30s were attributable to the New Deal, and World War II ended the New Deal. That's why the Depression ended. So I don't hear too many people except the von Mises people saying this. So would you like to go to U.S. notes?
Yes, sir. I think I've got it up there. Let's double check and just put it in here again just so it's there. Go ahead, my friend.
Yeah, as you can see, the U.S. notes, the 10-year note, there is a high coming in. In fact, that is this week. And the month of June is usually bearish. So with the dynamic cycle pointing down and the monthly seasonal cycle also pointing down, this is like throwing a cinder block to a guy who's trying to swim. It's going to pull the bond market down. So it also implies a strong stock market. And so we'll go to gold next. And gold, this is the seasonality. Look where we're going here from May into June. Now, remember, that's the expected return. The odds that the market is going to go up. So if there's a 2% chance it's going to go up 3%, then it's 10%. What did I say? If there's a 50% chance it's going to go up 3%, then the expected return on the left axis would be 1.5%. So you see June is a flat month just before the big rally of July, August, September. So I think June will be a month in which to add to gold holdings if you're underweighted. So I don't think that gold has finished yet. They have dumped a ton of money, a ton of credit into the system. So if you go one more, you'll see the weekly. Here we see the weekly and monthly gold cycles. Weekly on top. Weekly you see coming into a sell here, May 30th. And the monthly in the first week of June, there is a sell signal that lasts until the end of June. Then you get a rally. In July and August, it actually points down. I'll have to resolve that later on. I can't do that right now. But if you go down one more, here's the gold breakout to 1800, 1850. See that little rectangle over to the right, just at the $1,500 level? It broke out of there, and that's $350 high. And if you tack 350 onto the top, you get about 1850, 1875. So no, I'm still bullish on gold. Now, obviously,
so you're looking to be a buyer on any weakness into June to take advantage of July or September bullish cycles.
Yes, that is correct. And, the dollar, and I think I mentioned this before, but the correlation between the dollar and gold usually move inversely. The correlation is usually on a scale of -1 to +1, -0.7. But it's actually, last time I looked in January, it was -0.2. And as one of my very experienced clients who's been around as long as I have, he said the only reason that would be is people want both gold and the dollar, which tells you that they sniff a very serious crisis coming up. And I also have a great graph of the number of CEOs that retired last year. And my headline is do they know something that we don't know? So you had people buying dollars, buying golds, and the smartest guys on the planet, the CEOs, all retiring.
Wow.
Now,
okay, the next one about real estate, correct?
Yeah, it's Richard Cantillon was the Scottish economist who pointed out that when you inflate the currency, it's got to go somewhere. It's like that old joke from the old Ed Sullivan show, if anybody remembers that, but that the Borscht Belt comedians used to tell of the guy who goes into his wife's bedroom and he knows something's amiss, and he opens up the closet and there's a guy in there. And he says, "What are you doing here?" And he says, "Well, everybody got to be someplace." So Cantillon taught us that money's got to go someplace. It's got to go to some asset class. And here you see the 18-year real estate cycle. This is from Phil Anderson's book. That is The Secret Life of Money and Banking. That's The Secret Life of Money and Banking by my friend Phil Anderson over in London. And this is actually from some obscure book called Boom Bust. This isn't, Phil's just reproducing it here. I forget the name of the chap, but I had never heard of the book or the cycle. But the way real estate works is you get 7 years of moderately rising prices. At the end of 7, I guess the psychology is, hey, real estate hasn't hit a new low in the last 7 years. Let's buy real estate. Then there's a sharp acceleration that leads to an overvaluation, and then a 4-year bear market. And if you read Phil's book, this is as regular as clockwork. It's pretty amazing that nobody sees this pretty clearly. And we agreed that 2009 we think was the low. So in other words, at the beginning of that graph, you could put 2009. You add 7 years, now you get 2016, which is a little gray area between the two 7-year segments. Now, between now and 2023, we're in the sharply rising phase. So I think a lot of the money that is being dumped into the system is going into real estate. And the next high is in 2023.
Bill, we have a pay a bill,
Sure.
and we'd like to bring back to show you some of the things you're offering the folks. We'll
Sure.
be right back with
Yep.
Bill Meridian,
Okay.
Cycles Research.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Bill Meridian. Bill, we have a question about the gold-silver ratio. Do you have any thought on that, and are you also bullish silver?
I have no opinion on silver, so no, I can't tell you too much about the ratio.
Okay, why don't you just go ahead and talk to us
just
about
let me
what
finish
you
on the real estate cycle. So
Sure.
if you are looking to buy, I mean, it's already 2023. I would buy right now if you're looking at it the longer term. If you're looking to sell, I would wait until 2022. I'd wait at least 2 more years to get maximum price. And then you probably have 2023 to 2026 or 7, a downslide, but it will not be as bad, I think, as the prior one, because according to the rule of alternation, this next one should be somewhat mild.
Mm-hmm. Wow. Another question someone's asking is, what's happening in our economy? Is the same thing happening in Europe?
Yeah, but, it's always worse in Europe because they have so many bloody rules and regulations. It's very hard to bounce back.
Mm-hmm. Okay, good. Okay, can you tell us about your YouTube channels, my friend?
Yeah, sure. I haven't put anything up there for a while, but I have, BillMeridian.com, Cycles Research Early Warning Service is a monthly newsletter. And the last book I wrote was Mastering Geopolitical Predictions, Applied Mundane Astrology. And I did, by the way, I think I said it on your show, but I did predict that China would come down hard on Hong Kong in June. And I think I predicted that sometime last year. And then I have the YouTube channels, Planetary Stock Trading, Mastering Geopolitical Prediction. I haven't put anything up in quite a while.
Brilliant stuff. The work that you do, Bill, is really incredible. One other question about the cycles. Would you give me a heads up so I could let the folks know so they could attend the cycles thing in June that you're going to be doing,
Yeah, just type in Foundation for the Study of Cycles, and it will take you to the brand new website. I mean, it was new about 2 or 3 weeks ago. The foundation, of course, was around from 1940 to the 70s under Ed Dewey, and the last 8 years of its official existence, about 10 years ago, was Richard Mogi. Then it became defunct, and now we brought it back. But you'll have me on again, so I'll have
I certainly will. We'll talk to you later. Stay safe, my friend, and may God bless.
Thank you, Larry. Bye-bye.